What's up guys, Jake here. In this video, I want to talk about IPOs. That stands for Initial Public Offerings. And we gotta do this because I frequently get comments on my videos saying, Jake, what about such and such company's IPO? Are you gonna make a video about this company's IPO? And I've talked about this in prior videos, but I do not invest in and I do not trade IPOs. The reason why generally is there's no technical analysis for you to examine. There's no stock history for you to trend off of. And there's no fundamental analysis because you don't have any of the company's prior financial records. Now, yes, there is disclosures in order for them to go public, but I'm not interested in that. When I choose a company to invest in, I'd like to see ideally a couple years worth of financial history, and you just can't get that with IPOs. And aside from the lack of fundamental or technical analysis, I don't trade IPOs because their performance is terrible. How do people keep falling for this? The joke in the industry is IPO stands for it's probably overvalued. And the goal of an IPO by the company is to get as much money as they can from you, the investor. And the investment banks, this is Barclays, Goldman Sachs, Morgan Stanley, Charles Schwab, the people who set the value for the IPO, they're also trying to get as much money as possible. The reason why is the investment banks get like a 7% take of whatever the IPO brings in. So the goal of the company and the goal of the investment banks is to price the stock as high as possible without it collapsing. But even then, it often still collapses. If you want to learn more details about how to buy IPOs at the IPO price and in general performance of the big tech names IPOs over the last 20 years, you can check out this video I made 7 months ago. All the information is still good. I will link that down below. But in this video, I want to focus on the 10 biggest IPOs of 2020. And currently it's May, so we're about 5 months into 2021. Let's see how these stocks are performing. Now this article is from December 15th, and the stock market and all of these IPOs were doing a little bit better in December, but it hasn't even been a year for most of these. So let's go to the first one. And this is Warner Music Group. This is a record company label. And we're going to divide all of these stocks into two camps. Which ones today are positive and which ones today are negative. So for Warner Music Group, it closed on opening day at $29. And this one's up. It's up about 19% since it IPO'd June of last year. So we're about the 11-month mark. So I'm going to click and drag this to the left so we know that this one is positive. Going to the next stock, and this is an EV. This is LI Auto. So it's a high-end hybrid electric vehicle company out of China trying to compete with NIO. And it IPO'd in July of last year. The share price closed at $16. It then shot up 146% to $39. So if you're a swing trader or a day trader, maybe you make money. However, if you bought it at any point after November 27th, then you've lost money. It's down 52% from its high. However, if you bought it on opening day, I guess you're up 17%, so that's not bad. We'll put this in the positive column, even though it's downtrending and it is falling hard currently. Next stock is Rocket Companies, and this is a Detroit-based mortgage company, and this IPO'd on August 6th, and so it's been about 9 months, and it closed at $24 on opening day, currently down 28% from its IPO price, and down, let's see here, 37% from its all-time high. So this is a negative. We're going to keep it on the right side of the article. Next stock is XPEV, and XPEV once again is competing with Li Auto and NIO as a EV stock, and it IPO'd at 22. It then shot up 182% in December, peaked at 64, and it's now down 59% in about 4 or 5 months. However, it's still positive from its IPO price, up 14%. However, once again, this stock is still falling, and it hasn't been a year yet. So XPEV could definitely fall below its IPO price in the first year. Next company is Snowflake, and the buzz around this stock when it went public in September was huge. Everybody was talking about it. And this stock closed at $240 on opening day. It then shot up 61% to a high of $387, and it has been falling like a rock the last 5 months. It's down 45% from its all-time high, and it's down 11% from its opening day price. So currently, after the first 5 stocks, the score is 3-2. Let's go to our next one. This is a company called Unity Software, and software for 2D and 3D content designers across a wide variety of platforms. And it closed on its opening day at 68. It then shot up 141% to a high of 164. It's now been falling like a rock. It's down 47% from its high. And this IPO'd in September, so it hasn't quite been a year. It's still up 26% from its IPO price, but once again, it's falling hard. But we'll put it in the positive column. Next up is GDRX, and this IPO'd in September. Closed at $52 on opening day. It got up as high as 8%. However, since its IPO, it is down 41% from its IPO price. Holy cow. Next one is a crowd favorite. This is Palantir, and Palantir IPO'd in October, I guess under $10 on opening day. It then shot up huge, 282%. However, Palantir has been falling hard, and it's in a decline, down 41% over the last 4 months. But we're going to put that in the positive column and go to the next stock, and this is DoorDash. DoorDash closed at $175 on opening day. It did have a rebound in February. However, it is currently down 23% from its opening day. So that's a negative. We'll now go to Airbnb, and everybody was talking about Airbnb when that IPO'd. How's that doing? Closed at $139 on opening day in December, shot up huge, 52%, and from its all-time high, down 37%. And this has only been 5 months, so it hasn't even been a year, and it's down 4% from its IPO price. Wow. So just going off that article of the 10 largest IPOs from 2020, currently, as of May of this year, 5 are positive and 5 are negative. However, some of these I question. Warner Music's doing good. LI Auto is in a decline. I think this is going to fall below its IPO price in the next couple months. Same thing with XPEV. I think the EV stock craze is definitely cooling off. This could also fall. Same thing with Unity Software. This is also falling. It's not going up. Same thing with Palantir. I think this one might stay above its IPO price, but it's still in a massive decline. So where I'm going with this is be very careful about investing in IPOs in their first 13 months. The reason why is because all of the company's original investors, their angel investors, A series, B series, C series, private investors, they're trying to get out. They've locked up their capital investing in companies like Palantir, and they're not getting a return until that company goes public. And they often have lockup agreements to prevent them from dumping all their shares on opening day or the first 6 months or the first year. So if you want to know what the true value of a company that's been recently gone public, wait 13 months. There's no rush. What percent of these companies actually are positive by a substantial amount after their first year? And these 5 are not. And of these 5, I don't think 3 of them are going to make it. So you're looking at roughly, this is a very small sample size for this survey, but you're only looking at a 20% chance of actually picking a good company that will be stable and will steadily go up from its IPO price. Otherwise, just wait. When it dips after 6 months or 1 year, buy a great company. These are great companies. buy a great company like Snowflake at the 6-month mark once you're past this initial craze, when all the hype has worn off and this is now a company that just people are investing in rather than trading in the short term. And the real reason I wanted to make this video now is because of the fallout of certain companies like Bumble. This went public in February and this was a big deal. And look at this. It was trading at $75 on opening day and it is down 45% in 3 months. 3 months. Now, what is a good price for Bumble? I don't care, because I'm going to wait for it to stop falling. I think Bumble is a good company. They own 2 dating services, Bumble and Badoo, I believe. And it's a good company that I think is going to be very profitable. But if something's falling, let it finish falling. There's no reason to buy into this. So when we get to the 13th month mark for a company like Bumble, I am going to look at its valuation and say, hey, has this stopped falling? Has the sell-off from insiders finally ended? And is this a good time to invest in this company? Same thing with Coinbase. How many people who are really into crypto believed that this stock was going to go to the moon? And look at this. It closed at 342 on opening day, and it is down 27% in a month and a half. And this stock's probably going to keep falling. So when should you get into this? If you're a believer in crypto and a believer in Coinbase as a crypto exchange, wait 13 months. Now, Coinbase is a little bit different. This was a direct listing, not an IPO. I don't know if they have a lockup agreement with their initial investors, but it's not looking good for Coinbase. Let's look at a company that's a little bit more mature, and this is Lyft. And Lyft IPO'd in 2019, and wow, this fell off a cliff, down 49%. I mean, if we just go over its first year, down 44%. Now, yes, the stock took a tumble during the pandemic. That makes sense. That's reasonable. So maybe a good time to get in was in October of last year. It's up significantly since its low. However, we still haven't gotten back to its IPO price. 2.5 years later for Lyft, we are still down 36% from its IPO. Is this a good valuation for Lyft? I don't know. I don't care. Market cap $16 billion. Nope, I'm not interested. Let's look at another company, Snap. Snap IPO'd at $27. Its first year, it did absolutely nothing. Down 46%. Its first 2 years, down 81% from its IPO. Snapchat was at one point $5 a share. This is the time to buy new companies, to buy companies that you believe in and you think are strong and are going to be profitable someday. If you just waited past that first year, wait for the hype to go away, wait for people to forget that this stock is even listed, that's the time to pounce. That's the time to get in. And I mean, if you had bought Snapchat when it was at $5, you'd be up 12,000% in 2 years. And that's the point I want to get across in this video about IPOs. Who benefits from IPOs? Private investors, the initial angel investors of the company before it goes public. They're the ones who finally get to cash in by retail investors buying their stock at the inflated IPO prices. Same thing with investment banks. They get their 7% cut of whatever the IPO goes for. Company managers, making commissions off of hyping up the stock to their institutional clients. Initially, if you're not familiar with IPOs, there's the IPO price that only institutional clients with these investment banks get access to, and then there's what you can actually buy it for on the New York Stock Exchange, open to retail investors. So if you're getting an IPO price because you're already rich and well established with one of these investment banks, then good for you. But retail investors are losing out. Also, if you're a day trader and you want to basically day trade, swing trade on the hype in the short term, and you're smart enough to get out when you know it's grossly overvalued, good for you. But if you're looking for a buy and hold long-term investment, just let the first year pass. Let people forget about this stock. Let the price come down. That's the time to get in for great companies. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. If you have any comments or questions, let me know down below. I love hearing from you guys. Till next video, take care.